Never opposed that.
Well, but it's just that there's, you know, certain times of day where candy time is candy time. Hey, just if you could have any candy right now, what would you decide what would it be?
Sour
Sour Strip?
I really do love those.
I like the Skittles bubbly things.
Gummies?
The gummies, yeah.
They're good. Yeah, easier on the teeth.
They're easier on the teeth. They just feel right going down, you know?
Sugar.
It's a lot of, well, they're all a lot of sugar.
Well,
You don't go into candy not looking for sugar.
that's the problem.
Yeah. So where'd we land on that? Are we not getting candy?
I'm not getting candy.
Go ahead.
No, I'm not getting candy.
I'll buy you some sour strips. Or sour, no? Alright. It's alright. I ain't got no money anyways. Welcome to the closing beat, everybody. How we doing? Happy Thursday. Ain't got no money because that inflation out there, man, huh? That is killer. We'll talk about that here. We'll probably talk about it a little bit tonight, too, in our Wine and Wealth class. Every Thursday, I do a class for clients. We call it Wine and Wealth. We're definitely going to be drinking tonight, 7.5% inflation. So I hope you'll join us. If you're one of our clients, you just log right into the dojo. You'll see me popping up live there. We're going to cover the all that jazz tonight and probably a couple other things, but I'll do like I always do. Spend the first 5 or 10 minutes just covering the core of what we're trying to talk about, and then I'll hang out. We'll just have a drink together and talk about whatever you want to talk about. But we can now manage any of your held away accounts, like your 401ks, 403bs, and so far so good. Really excited about that because it means that now I can force you to keep all your dough straight, right? No messing about there. All right, anyways, as far as the stock market goes today, a little bit of weakness, right? Got a few emails today from people going, I don't know, man. I think the bounce has already happened. We better just like get back in and stuff. I'm like, all right, if that's how you feel, let me know. And by the end of the day, it was like, well, you know, maybe not yet. Let's just see what happens. Don't play the market day to day. I don't look at the market day to day, though I talk about the market day to day. When I'm looking at this and showing this to you, this is just something fun just to look at on a day-to-day basis. You know, what are people freaking out about? What are people excited about? But I'm not really looking day to day. My eyes blur to the bigger picture. So just keep that in mind if you're looking for the long-term stuff. If you're doing the short-term stuff, you like doing a little trading, hope you'll check out our site. We call it the research site because there's some research tools available for you. But we're doing office trades, right, where we just trade right in front of you. What kind of short-term things can we do just to have fun, pass the time, and play the market? You know, keep engaged is basically what I like to do with it. And so we're showing that. All of it's 100%. It's my account. I just put some money in there to give it a shot. You'll get to see everything. Nothing is held back. And we're making it educational as well because it doesn't make sense to just watch somebody click buttons, right? You got to learn from it as well. So I can promise you nobody is doing it like this. And so, you know, it's going to be fairly advanced, but we'll be teaching along the way. Inflation. Up 0.6% since the last quarter there, and that would mean inflation is now at 7.5%. And you know when they talk about that, why the number 7.5% is referring to 1 year ago. So 7.5% as of now, but compared to last year, so it's up 7.5%. So don't let that. I've seen a few people say, you know, that inflation is rising at 7.5%. No, it's just changed 7.5% from 1 year to the other. So it's official. If you are 1 day younger than me or anywhere younger than me, you have never seen inflation rise at 7.5% in the course of 1 year. And that would mean, I was reading something about this earlier, that would mean that the average household in America now has to spend an additional $250 a month or $3,000 extra a year just because of inflation. So $250 extra dollars just to keep the wheels spinning. And that's unfortunate. But remember, it's not all, this is where people get a little upset. It's not all the government's fault or the Fed's fault, I should say. The government really can't do much about inflation. It just, what are they going to do, right? They should try to get you back to work, but it doesn't seem like they want to do that. So they don't have a tool. There's nothing magical they can do to get rid of inflation. The Fed, of course, can raise rates a little bit and start tightening up the U.S. money supply. But part of it is the velocity of money. Money moving. At what speed is it moving? In other words, how fast does a dollar come into your hand, then leave again, right? If we all slow down how fast we're willing to part with a dollar, then inflation would start to take care of itself. So really, part of the blame is on you, even though the government's throwing money out of helicopters and all that great stuff, and money's been super cheap. Well, you control inflation as well. So quit buying stuff, right? For the sake of all of us. I always joke, they say, they used to say, get the vaccine because you're actually helping other people. All right, I get the debate on both sides there, but stop spending money because you're helping other people as well, right? So let's focus on that for a little bit. Hang on to that dollar just one day longer before you decide to buy something with it. Anyways, with that in mind, you got the S&P here pulling back. Good sign of weakness, right? Because yesterday you have an official higher low. Anything under this low from 4 days ago now tells people that that's a false move. It didn't work. It was one of the times where you lost, anybody that bet on that. And so the S&P trying to retreat here just a little bit, and that's okay. A lot of the stuff inside the S&P is going to be earnings related. If you saw like Lumen today, that was a breakdown on earnings. What was the O'Reilly? We happen to own that one. Go over to O'Reilly. I actually finished the day up on the day. So O'Reilly's earnings, Disney's earnings, we happen to own that one as well. So that's all good news there. On the downside, it's going to be anything that's affected by higher rates. And I'll tell you why that's odd in just a second. But you got the home builders. You could expect them being a little bit weak on the day. Some of the tech stocks, AMD, we happen to have that short in our office trades position, so happy to see that. Adobe. Tech stocks are all going to be weak. Some of the lesser talked about names, you got Autodesk down on the day, and REITs as well. There's Digital Realty also moving lower. Lennar, home builders, utilities like Duke. You can understand why these are weak on the day, and those are your weaker stocks in the S&P. Disney's going to be the strongest. That's just because of earnings there. Micron also moving a little bit higher, but did give back more than half the gains there. Kellogg's moved higher. I believe they're going to raise prices again. This was earnings related for the gap there, but I think they said they're going to have to raise prices maybe another time there. That'd be, 4 times this year already. Moody's a little bit higher on earnings as well. And some of the financials. Today, the financials that did well were the smaller financials. We have a handful of them in our portfolios, of course, and they all did well, right? The smaller banks now really can rely on the fact there's 100% odds that the Fed is going to raise rates in March now. That's officially, that's not my number, that is official. Cisco a little bit higher, and Boeing I think got about 1% on the day there as well. If you look through the Nasdaq, they took it the worst today, right? The tech stocks are going to be the worst. That's what happens. Higher rates don't help these tech stocks, and so you can understand why I just mentioned a whole list of them that were actually lower on the day. Let me sort my list here. There you go. So you got Seattle Genetics breaking a new lows as well. I didn't catch, that's an earnings play there. I didn't catch that one actually. AMD I already mentioned. QCOM also moving a little bit lower. A lot of those names, Adobe, NXPI, Semiconductors down 5%, Microchip 4%. You can look around. Xilinx down 4%. Intuit, same thing. Tech stocks just took a bit of a beating today. And you know how that record plays, right? That's what happens there. Datadog up, great earnings by the way. So they got a boost higher. Atlassian, did it do it? There you go. Up 3% on the day. The Chinese stocks, Pinduoduo, you got Airbnb also higher. Just a handful of names that have had either earnings today or have had upgrades or downgrades based on those earnings that just came out. If you look at the Nasdaq, we talked about this one being a little bit weaker, not officially claiming the higher low. So that one, that's not good in the short term here. And again, what's going to happen? Between now and the day that the Fed makes their rate decision, which is I believe the third week in March, what good is going to happen, right? Why would the stock market go to highs? What's the hurry to be invested in any way here? But I get it. Some people feel like, oh my God, the bounce, it's going to hit new highs. Give me a reason, right? We got Russia over there actually physically starting their military exercises right outside of Ukraine. That doesn't sound good, right? Inflation 7.5%. That doesn't sound good either, right? Fed's going to raise rate, maybe a 0.5 point rate hike. A lot of people are thinking that now. That doesn't sound good. What's good? What's the belief that we go to high? How all of a sudden does this get better? So I would continue to mention that for those of you that feel like you got to dive in the market, but you got to do what you got to do. I understand. Hey, the Russell also moved higher to start the day, right back into the known resistance area there. And so there's a big challenging spot for the Russell. Any small cap stocks are going to be challenged here in the short term. Ideally, they reverse course and within a day or two actually break above it. That will just put all that to to rest that people believe this is kind of a temporary ceiling. But I drew this line yesterday for you, and as you can see, it is behaving as such. It's not magic. That's just what people like to look at. And the Dow was no stranger to a little decline here today. Pretty much across the board. Yeah, look at your big stocks, right? Microsoft took about a 3% hit. Home Depot getting weaker by the day. They got earnings coming up here towards the end of earnings season, but Cisco moving lower, Honeywell, 3M, Apple down 2%. These are not scary moves at the moment, but they are reversals from what we saw yesterday. So a lot of pressure there. All right, you got bonds. Yields moving higher means prices move lower. Anything bond related still taking a little bit of a hit there. Handful of things here. Look at I shared this with you the other day. So what I'm showing on the screen in purple is the effective Fed funds rate, which is nothing at the moment, and the 2-year Treasury, and this is just recently updated. Look at the difference. These two are pretty closely correlated, meaning when the Fed is raising rates, you see yields moving higher. When the Fed is lowering rates, you see yields moving lower. There's a disconnect at the moment. Yields have taken off without the Fed. Why? Because they no longer are purchasing as much, so they're not holding yields down. They've lifted their hand, and now yields can sort of move based on a free market like they should move in the first place. And so what happens there is now people know rates are going up. Therefore, they want to sell bonds, which makes yields go higher. And take a look. You have a big spread there. People have already priced in 5 rate hikes now. Look over here. 1, 2, 3, 4, 5. Well, actually, just a little bit more. Just a touch more than 5 rate hikes from the last time, if you were looking at that. That tells you, A, that yields are very extended. Right? Also tells you that, well, the Fed's going to raise rates. They're going to play catch up to that. There's no question about it at all. Actually, have you guys ever looked at the gold copper ratio? Hang with me here. Can I actually show it to you? So one of the fun things people like to look at. All right, we're going to have to do it this way. But side topic. If you take the ratio between the price of gold and copper, which I'll have down here, right? And you take the 10-year. This is a correlated pair. This is what the analysts like to look at. It's not a real retail public way that people like to look at it, but a little lesson for you. So the ratio between the price of gold and copper trends with the 10-year Treasury rate, right? And that's actually very common. What happens is when the 10-year gets a little extended and the ratio between gold and copper does not follow, yields identify themselves, it's funny to say it that way, but yields identify themselves as extended and therefore tend to get a little pressure to the downside. It happened here, you can see it there, and we're starting to see that now. If I zoom in, I don't know if this is going to look great. That's not bad. So we have the 10-year yield starting to take off back to about 2%, and the ratio between gold and copper is not participating. It should not. That's not going to happen. It's not just going to suddenly blast off. And so what that tells you right now is, well, first of all, the ratio between gold and copper often can explain the price of, or the yield of the 10-year. Right? So think about it that way. So gold and copper ratio right now is explaining that the yield in the 10-year is extended. If you're financing anything in the short term, you have every indicator showing you now that you are paying the highest rate you've paid, at least in the last few months here, and you are breathing on, or you're running on fumes up there, right? So it's very likely you see some dip in the Treasury rates there between now and when the Fed makes their announcement, because it's moved beyond 5 rate hikes, right? We can understand if it's hovering around the 4 to 5 rate hikes, but it's now moved beyond that, so it's even more extended. I don't know if I explained that very well, but that was sort of impromptu, and I apologize. We can go into more detail another time. So if you look at real estates, well, you could look at REITs, real estate, you could look at utilities, you could look at tech. Here's the XLRE. Obviously, they're going to be a little bit weak. They like lower rates. Utilities, of course, like lower rates. The one thing that's been holding them higher lately has been, sure, rates are going to go up and utilities borrow a lot of money, therefore they need to have lower interest rates, but everybody's going to electric thinking they're saving the planet, and they just plug into their house. Who benefits from that, right? If everybody buys an electric car, we all drive it home, we all plug it in, our electric bill obviously it doesn't go one for one, but that means more money for them. So the presumption there is that, hey, even though rates are going to go up, this move towards electric everything is actually going to help utilities overall. So you don't see them like, hey, Dustin, why aren't utilities at 52-week lows if we know rates are going up? That's part of the belief on Wall Street right now. I don't know where I stand on that. Tech stocks also a little bit lower. They also need lower rates. They don't like tightening. They need loose money, the ability to borrow and continue to grow and everything as they do. And Bitcoin, where's the inflation hedge here? Again, it's never shown itself to be a good hedge for inflation. And you notice people don't say that as much, kind of like back in the day when we went from global warming to climate change, right? You can believe anything you want to believe there. It's just they knew they had to change the name because global warming wasn't working. Climate change, we can all get behind and want to support and all that stuff. I got it. So it's the same thing with Bitcoin. They're changing the phrase. Nobody says a hedge against inflation anymore. You notice how that just fell away? It's because it's not true. The inflation numbers today stopped the Bitcoin rally right in its tracks, right? So just something to know if you're participating there. What else do we have? I think we're good with that. I've rambled a little bit. New highs and lows, 33 new highs, 2 new lows on the day. Financials were the majority of new highs today. However, the big ones started to reverse. Right? So the smaller banks ended up performing the best. Larger banks, a bit extended. Bank of America, one of the outperformers here, hit new highs and started to reverse course a little bit. Aflac also extended as well and hit new highs, pulled back a little bit. That's the theme. You're going to see that. Wells Fargo is one of the outperformers, and that one officially did the same thing. American Express falls into the same category, but it didn't hit a new high today, so that's not on the list. Norton LifeLock, I hope you guys don't look at these sort of rapid increases and think, okay, I will buy the stock. It did hit new 52-week highs today, but you know, if you've watched, right? Super extended here. Super extended. Don't chase it. It's just interesting that it made new highs. And Marathon Petroleum, one of the positions that we have short in the office trade segment there, also hit new highs, but it's just finding its top. Right? Obviously, if I could have put that trade on any other time, I would have, but not bad. I'm not complaining about it just yet. So far, so good. We had sold the 8250 calls there. Now, changes in the office trades here today. Starbucks. Let's get rid of that. There we go. Nope, that's not going to be it. Where are we at? There we go. Right button. Starbucks, I actually took that trade off. I had sold the 95 puts about 2 weeks ago and nothing really happened. We made 21% of the total premium there. And I say, you know what? I don't like that it's bouncing. It's had every opportunity to start bouncing and it's not bouncing. I don't like that. We don't need the position. So we closed that out. And again, it was 21% of the profit instead of waiting for more. Moving on. ExxonMobil, this was Cody's trade. Actually, you want to mention it?
We closed it out, right?
It's closed out. You officially got filled there. 44%, 41% of the total premium there because it was a whole 3 days that you held that trade.
Perfect. That was good. In and out. I like it.
Are you an in and out kind of person? Do you think you'll find yourself in the office trades being like, bam, bam, let's go?
Yeah, I think so. Let's get in and out. Let's move on to the next one. So I'll do my research over the weekend and I'll come prepared on Monday with another good trade.
Oh, okay. I like that.
Off to a good start.
I like that game plan, man. I just get in there and give it 100%, you know, and just.
Yeah, well, that's all you can ask.
That's all you can ask for, you know. We just moved the ball forward. Coach told us we had to.
Give all glory to Jazz on that one, and we're gonna move on.
I love it, man. So that was Cody's trade. ExxonMobil closed out 41% of the total premium, and that's it. That was all that was really done today, and we'll continue to move forward with that. Hope you guys are enjoying the office trades because. I'm having fun with it, you know, something different to do. We're not trying to be heroes or anything, just like having a little lunch and talking about some trades. Hey, stocks in the news here. You got Disney. Impressive, by the way, with Disney there. Disney Plus beat by 4%. ESPN Plus beat by 13%, right? That was the dog of Disney, and all of a sudden, here they come there. Revenues beat by 5% thanks to parks and experiences. That's a category of their earnings there. Up 18% there. Margins for that division, for the parks and experiences and products and stuff, up 34%. That's interesting. People go to the parks, they spend some money. I took some notes here because Revenue per active user on Disney Plus was about 2% higher than expected. Revenue per active user on ESPN Plus was 5% higher, and the same on Hulu, also 5% better than expected. They were the latest one, by the way, to continue to say that higher costs they mentioned higher costs, right? They were the latest one to say, basically, we're seeing inflation as well. And they mentioned, I always look at the parks just to see what they're saying there. Operations at the parks generally performing as normal with not many COVID restrictions, so they're happy to see that. I'm happy to see that as well. iRobot. Yeah, they're still a company, by the way. Down 14% on the day. This one's interesting because do you give them a pass or do you not? And apparently Wall Street doesn't give them a pass. Revenue down 16%, but that was because $35 million in shipments were unable to be delivered. They had $35 million. Like we got the orders, but we can't deliver because they had semiconductor shortages, shipping issues, supply chain issues there as well. If they would have filled that $35 million in orders, they would have beat on earnings by 5%. So they missed it because of orders they can't fill due to what everybody's dealing with there. Their gross selling price also was up 7%, but they said, look, these shortages of semiconductors and these shipping issues are likely going to hit us in the second quarter as well. So I think they got a little double whammy there. Uber revenue beat by 8%. Freight business for them was a good one there. Saw their bookings up 58%. The problem is their freight division is not very large. It's kind of just a little guy there compared to the rest of their business. Monthly active users beat by 1%, but total trips missed by 5%. Again, overall bookings are up 25% for them anyways, and they're making a little bit more per rider, but there's still less people riding, so that likely hurt them as well. Twilio, it's just a good report. I don't know, not much to say there. They beat by 10% really. Had less of a loss than expected. They lost 20 cents. Good there. Raised their guidance going forward. I don't have much else to say about that. That was actually good. And Twitter came in a little bit weaker than expected there. Lowered their guidance going forward, and once again, they have a down day when reporting earnings. So that has happened, as you know. If you know from watching yesterday, you know that has happened quite a bit for them. I believe they're buying back a few $1 billion worth of shares since they're so cheap. $4 billion. Brand new stock buyback plan. It's going to be $4 billion. All right, I'll take your questions if you happen to have any, and then I'm going to get ready for our wine and wealth tonight, because that's always a good time, I think anyways. So let's see. What do we got? 10-year bond now over 2%. My bond ETF fund tracks all red today. Oh, savvy. So the question is, why did you miss the market today? Inflation numbers come out. That was pretty much the reason. Miriam's going to take a world cruise in 2024. A world cruise, man. I had a client leave for that in November, I think. Can't remember when they said they were leaving, but they were on that first one that fired back up. Yeah, that'd be cool. I don't know about like that many days, but Aaron, if you could pick only one stock, can't do that. Can't say that one. Not allowed to make those suggestions. I could do it in Wine and Wealth and the office trades and stuff. But publicly, I get in a lot of trouble, and I'm trying not to get in trouble. I'm trying to do good things, man. Good things. Is it possible for the entire market to return back to pre-pandemic highs? We had 2% unemployment, 2.5% inflation. Now the economy is in worse shape, 75. Oh, meaning by those metrics? Like get back to 2% inflation? I think Biden said today, by the end of the year, we're going to be there. I'm not sure how just yet. I'll cheer that on, but I don't know how we're getting those numbers. I don't know. I think we all like to have goals in life, man, That's it. If I missed your question, just let me know or type it again. Didn't do the office trades today. I was in the process of doing some cool stuff here, so I can't do it every day, but I still like to keep you guys updated. And I do have some more education type classes coming along for that. instead of just always doing the trading thing, try to help you as well. Yeah. Right now, just spending money on booze, maybe too much. The class tonight, I don't have to ask halfway. You're spending too much money on the booze. At least you're honest, man. So you can't have a problem with alcohol if you're telling people that you're actually spending money, right? It's the people that try to hide it in the corner and drink quietly in a dark room. So I agree. Oh, man. Holland, America. That's cool. Twitter's not doing good. I'll give you that one. Yeah. Thoughts on Alibaba and PayPal? You got 20 shares of each. Yeah, I know you're looking to add to that one there, but I just don't. I wish I had a better answer. Like I said, I want to add more to it as well. We have the world's smallest position on Alibaba in our portfolios. Got lucky where we sold it, but I'd like to add back. It's obviously discounted. I feel like we need to add to it, but I have no good reason. You know. Harry, you think? Well, I don't know. Harry's saying you think they sent him out to basically, deliver the message and start testing the waters for a 0.5 point increase there. I don't know. It'd be all speculation. It's kind of like Biden. Biden came on, an hour, 2 hours after the inflation report to try to say, hey, people are making more money, so inflation's not a big deal. I mean, was that the best use of his time today? Any president, doesn't matter. If you're whoever the president is, you get a number like that. Do you go out and do that? You'd normally send I was going to say Kudlow because I had him in my head from when he used to do that. I just don't think you send the president out for that. I don't know. People focused on it. Yeah. I forgot to talk about PayPal. Yeah, so PayPal, I'd certainly like it to bounce. No bounce here today. It's cool just hovering right around here, but this would be a lot like Starbucks, right? A big move down, it's very extended, right? Did that with Netflix, did that with Facebook. But PayPal doesn't seem to want to bounce at the moment, right? So there's no confidence that this 119, 120 area is your new support. So I would say anybody that is holding it and hoping for it to bounce is not out of the woods yet. Yeah. There we go. Get you guys fired up about the politics. Huh? I like it. What do you think about the SARK hedge against the ARK fund? No. I mean, what? I'm a little bit old school when we talk about a hedge. Why are we paying for a hedge? If you want to hedge, just reduce your position. That'll slow things down, wouldn't it? Be greedy when others are fearful. Yeah, make them more fearful if we could. Yeah. Why is Brazil going up? I didn't look today. I don't know. The EWZ is a good one to use. So just a little rally here today, but this is the sort of the way for the Americans to play the Brazilian market. If you're interested, the EWZ. But I haven't actually looked at it today. So I couldn't tell you. If you own it, you're happy, huh? Looking pretty good there. Yeah. All right, that's cool. I think we got it there. I will get ready for our class here tonight. You guys enjoy the rest of your day, and we'll see what tomorrow has in store. But I think the market was a little bit weaker after the close as well. So we'll see. Hoping for a little bit of a push lower, right? Enjoy.